invite co-host. And that, I believe that has worked. Let's see. Good morning, everyone. Good morning. It's Monday, the 20th of January. It's the morning blog.
Very good morning, everyone.
Good morning. 1 second, let me get the legals out the way. As usual, nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by POQ Global Limited, Chinese POQ or POQ Suite, or indeed the hosts, which as you know by now is Mr. Michael Brown, way, Mr. Ryan Pacey, way. Morning.
Dear me. Good morning. How are you, mate? Have you recovered from your cider festival over the weekend?
Oh, barely. I'll tell you what, the scrumpy shits the next day weren't great. Sorry, too much information. For those unaware, I was partaking in some wassailing on Saturday, which is basically very old Somerset or West Country tradition where we scream and sing and shoot shotguns at cider trees because otherwise spring doesn't happen. So yeah, you're welcome, I guess.
Yeah, for those unaware, Ryan is actually a yokel.
I actually am in deepest, darkest Somerset right now, putting the culture into agriculture.
Crikey.
But moving on, enough about me and my drinking.
Yes, indeed. Right. Good morning, everybody. It's likely to be an interesting week ahead, of course, with a certain orange man taking the oath of office a little bit later on today, becoming the 47th president of the United States. But before we get to that, a little bit of a look back at Friday and a few bits and bobs that have happened over the weekend. It was a relatively positive day for equities on Friday. The S&P 500 ending the day around 1% higher, the Nasdaq advancing almost 2%, although it was a day that was broadly lacking in significant catalysts, at least in terms of the data side of proceedings. We also saw that positive sentiment spill over into the Treasury complex, with two-year yields rising by around 5 basis points on the day, touching 4.28%, although further out the curve we traded broadly flat. The dollar a little bit firmer, with the dollar index running up to a high of 109.5, although we have paired most of that move as the new trading week has got underway, with the other G10s that traded softer on Friday, also recovering most of the lost ground early doors as the new trading week gets up and running. In terms of those catalysts then from Friday, we did have a few data releases out of the United States, both housing starts and building permits, surprising to the upside of market expectations. Housing starts actually rising to its highest level since February of 2024. One caveat that is just worth noting in terms of the housing starts and the building permits data as we move through the next few months is that they are likely to be considerably skewed by what's been happening in California and in Los Angeles recently. Obviously, a lot of stuff needs to be rebuilt in that area after the wildfires, and that is likely to inflate both housing starts and building permits as we move through the next couple of months. So perhaps not too much by way of signal can be interpreted from that data in the short term. We also had the latest industrial production figures out of the States on Friday. Industrial production rose 0.9% on a month-on-month basis in December, about 3 times as much as participants had expected, and a solid rebound from the 0.1% decline that we saw in November. In terms of other things worth mentioning, I'm not even sure this is worth mentioning, but President-elect Trump and Chinese President Xi held a phone call on Friday. Good for them, presumably discussing their weekend plans and whether they were going to cider festivals, I imagine. Apparently, they also discussed the issue of TikTok. Naturally, this is not something I'm particularly familiar with, but TikTok, of course, there was a bipartisan law passed banning TikTok, which both President Biden and President-elect Trump supported. What I can then figure out happened was that it seems TikTok actually helped Trump get elected because it meant he could reach a much younger demographic of voter than he otherwise would have been able to. And all of a sudden, Trump doesn't want to ban TikTok, which means that he is now looking at some way of saving the app and presumably getting an American firm to buy it. From the Chinese side, President Xi saying that he hopes to have a good start with the United States in Trump's second term, and that he believes that China and the US can become friends and partners. If anyone else believes accept that, then I have a bridge to sell you. In terms of monetary policy, moving away from politics very briefly, we heard from a handful of ECB speakers as the week drew to a close, very much sticking to the script in terms of the ECB continuing with rate cuts as we move through the first couple of quarters this year, and that they are on track to reach 2% inflation at the end of 2025. We've also heard from the ECB's Holtzman early doors this morning, again marking himself out as the uber hawk on the governing council, saying that a cut in January is not a foregone conclusion. Yes, it is, mate. We also heard from the Fed's Hammack on Friday. She was saying that the Fed can be patient on rate cuts and that policy is, quote, moderately restrictive at this moment in time. Hammack is, of course, a voter in 2026, and her remarks were the last that we will hear from the Fed until the January FOMC press conference on the 29th, with the committee now in the pre-meeting blackout period. Last but by no means least, on the monetary policy side of things, we also heard more Bank of Japan sources on Friday. Of course, we've already had sources via Bloomberg and via Reuters. This time we had some BOJ sources via the Nikkei, and they were saying that the majority of BOJ board members are set to approve a rate hike next week, which is, of course, this week, because the BOJ meet in the very early hours of Friday morning. At this moment in time, given the amount of guidance that there has been towards a rate hike, it would be very surprising indeed if the BOJ didn't pull the trigger on a 25 bip hike, doubling the target rate to 0.5%. And last but by no means least, a couple of headlines in terms of the banking sector here in the UK. The first is that the Prudential Regulation Authority, which is the arm of the BOE that supervises banks, they are delaying the implementation of Basel III until 2027. This is the third time that the implementation of Basel III has been delayed, and of course will mean that if they stick to this new deadline, it will actually go into effect 2 decades after the financial crisis that it has been designed to prevent from happening again. The reason for the delay is because the US basically haven't pulled their finger out yet and implemented it stateside, and a lot of banks, both here in the UK and in Europe and pretty much globally, to be honest, have been saying, well, we don't want to have Basel III implemented in our country and under our regulator, because it's going to require us to hold substantially more capital than their competitors will in the United States, which obviously will put them at a significant disadvantage. So it's very much a case of waiting for the US to pull the trigger on that one, and then everyone else is likely to follow. So certainly don't rule out any further delays to that. And lastly, from me for now, is reports via the FT over the weekend that apparently Santander, they are looking at potentially pulling out of the United Kingdom. There is quite a lot of consternation within Santander, the fact that the UK arm is well, probably the most unprofitable part of the business. It is also one of the most capital intensive parts of the business. Of course, Santander UK is a combination of what used to be Bradford and Bingley, and I believe the Alliance and Leicester, who obviously both went under in the GFC. Santander rumoured to be looking at focusing on higher growth areas such as the United States instead. Of course, they have denied these reports, but nonetheless, that seems like a story that is not going to go away anytime soon. And well, for now, that is all from me. So back to you, Ryan.
Thank you very much, Mr. Brown. Oh, sorry, one sec. Clear my throat. So as usual, some overnight news headlines by our dear friend Zach, who puts together our overnight news roundup that was pinned tweet on our profile, so check that out, and on our Substack. Starting off in macro space, just following on from what my dear friend Michael Brown said about China and the US getting all pally again. China's VP met with Elon Musk on Sunday, urging Musk to promote US-China economic and trade relations, according to the Xinhua Newswire, which reported Musk is saying Tesla is willing to deepen investment and cooperation in China and play an active role in promoting US-China economic and trade exchanges. That's according to Axios. Sticking with the US for now, President-elect Trump. Do we still call him president-elect today? I suppose after today's president.
I was going to say for another few hours at least.
Yeah. So he's pledged during a rollicking rally, not my words, they're the words of the Wall Street Journal, a rollicking rally in the nation's capital on Sunday to enact far-reaching change in his second term, promising to oversee mass deportations, challenging progressive culture and slashing government spending. Trump and his top advisors are finalizing about 100 executive actions he will sign in the first days of office. He actually did, I believe, I saw a headline from ourselves saying that he was going to do 100 in the first day. First measures are set to include curbing immigration, increasing tariffs, and deregulating sectors ranging from energy to crypto. Morgan Stanley suggests that investors go long duration in US Treasury market by purchasing 5-year Treasury notes, saying the dip is an opportunity, as they say, a significant amount of term premium already exists, and recent inflation data shows signs of slowing. That's according to the Wall Street Journal. UK lawmakers have raised doubts over Chancellor Reeves's plan to cut down on wasteful spending, warning that a new efficiencies unit is understaffed and has little time to achieve its mandate. That's according to Bloomberg. Goldman Sachs estimates the oil market is pricing in a nearly 40% probability of a 25% US tariff on Canadian goods, including oil. Some geopolitical headlines. Israel has made the decision to attack Iran's nuclear facilities. That's gone to a senior EU official who told the Al Arabia Newswire over the weekend.
Easy
The official estimated, easy, easy peasy. The official estimated that Israel is expected to carry out the attack in the coming months, and that's according to Israel's N12 Newswire. That came via our friends News Squawk, actually. That's good. Citi say that Elon Musk was reportedly mentioned as a potential buyer of Intel behind the paywall of Semi-Accurate, the website that broke the news on Friday, takeover interest.
Sorry, can I just say,
I know what you're going to say.
I said this to some of the News Corp guys on Friday. Who the hell calls a news website semi-accurate?
I'm assuming it's related to semiconductors, but obviously someone didn't think this through for people that have no idea what semiconductors are. It's like,
clearly not.
It's semi-accurate news. Yeah, that'll do.
It's ropey as hell, really.
It really is. And finally, for me, before we go back to Michael in the studio, Europe is set for a resurgence in EV sales this year, with car makers delivering more than 160 different models to the market. But executive warns that profits may fall further because of regulatory costs and discounting. So basically, they're saying we're going to sell more of them, but there's every chance they're going to be selling them at a loss by the looks of it.
Deary me.
But anyway, back to you in the studio.
Well, thank you, Ryan. Right, in terms of today, then, I think the first thing to mention is, of course, it is Martin Luther King Jr. Day in the United States. So we do see cash, equity, and treasury trade closed. There are also some closures at the CME, but I couldn't make head nor tail of their holiday calendar. So I go and find that out yourself.
CME, big friends of PIQ, love them to pieces. We're going to have far more of their content on the platform as well. But one thing I do keep saying to them is they need to simplify the calendar. It's been 22 years of me looking at that thing, and it still blows my tiny little mind every time.
It blows my mind as well, which isn't much bigger than yours. So, we're like two peas in a pod with them. A bit of a backhanded one. Anyway, moving on from that, of course, that does mean that liquidity is likely to be a little bit thinner than usual. And of course, volume's likely to be relatively light as well as we move into the main event of the day, which is at 5 o'clock this evening, London time, precisely midday on the east coast of the United States. And of course, that will be the inauguration of Donald Trump as the 47th president of the United States. The guys at News Squawk tweeted out a very handy message in terms of some of the timings to keep an eye on. But to cut a long story short, the two timings that are worth bearing in mind for participants are firstly that midday Eastern time slot. That is when Trump will take the oath of office and also when he will deliver his inaugural address. That is likely to be, let's be honest, pretty punchy in nature because Trump will be seeing that as a political rally, effectively, even though the inauguration will be held indoors. Particular areas of interest for market participants are not only the issue of tariffs, which is the obvious thing that folk will be focusing on, but also the broader fiscal policy stance, whether there are comments on extending the current tax cuts or even broadening those in terms of their scope. Also, also whether Trump mentions the deficit. It was interesting that Scott Bessent didn't really touch on that in his confirmation hearing last week. And it will also be worth bearing in mind the issue of immigration, given that that could have a particular impact on the US labour market. That's when we get the words, and when we get the rhetoric, we will get the potential action considerably later on in the day, because after the inauguration itself, Trump will go off and sign the nomination papers for his cabinet nominees in a room just off the Senate chamber. He'll then embark on the inauguration parade, which is effectively a drive from the Capitol to the White House. He'll probably get out and walk and wave at the crowd at some point during that drive.
Just a
So it's
couple of
like,
babies.
oh God. So it's likely to be sometime considerably after 9 o'clock in the evening London time, 4 o'clock in the afternoon Eastern time, when we start to get the first of those executive orders being signed. And of course, those executive orders, which as Ryan alluded to, could be about 100 of them, they will very much set the tone for the early days of the Trump presidency. And of course, particularly in the realm of trade, if those executive orders do focus on tariffs, we will also be looking for the response from those nations that are targeted by any potential tariffs. So I think that is by far and away the main event to keep an eye on today. It's also probably the main event to keep an eye on for the majority of this week. It's not a sort of one-day story, tariffs are in and then we all move on. It's a very sort of prolonged thing, and ultimately these tariffs are seen by Trump and his administration as a negotiating tactic. So it is worth bearing in mind that this is going to go on for some time to come.
Yeah, especially as we know that the potential that he might kind of be drip feeding the percentage of tariffs as well, which would be an interesting one.
Absolutely.
Still need more colour on that.
That's
just in time for the
very good point indeed. Well, indeed, yes, and that could be a little bit spicy later on today. In terms of other bits and bobs to focus on as the week progresses, just to highlight a few notable points away from the political side of things. Tuesday, we have the latest UK employment figures. Of course, a little bit ropey, but we are expecting to see earnings growth quicken to 5.5% from a prior 5.2%. Of course, that pace will be incompatible with a return to the BOE's 2% inflation target. But nonetheless, given the downside surprise on CPI that we saw last week, the market is still pricing about a 90% chance that the BOE do indeed deliver a 25 basis point cut on the 6th of Feb. Tuesday also brings the monthly ZEW sentiment surveys out of Germany, which are probably going to be quite grim, as well as inflation figures from Canada and from New Zealand. Also on Tuesday after the close, we get earnings from Netflix. They are probably the most attention-grabbing earnings release this week. We do have 43 of the S&P 500 due to report over the next 4 or 5 trading days. Into Wednesday, a little bit of a quieter day on the data docket. We get public sector borrowing figures out of the UK and 20-year supply from the United States. Also on Wednesday, we are due to hear from the ECB President Lagarde. She will be speaking in Davos, of course, the World Economic Forum there taking place all week, as if there wasn't already enough hot air in the world. Most significant policymakers / politicians are actually skipping Davos this year. So I don't think that's going to make too much by way of waves, but nonetheless, perhaps just worth bearing in mind at the back of your head. Nonetheless, into Thursday, we've got a policy decision due from Norway. The Norges Bank expects to hold rates steady at 4.5%. They had previously indicated that they were likely to deliver a rate cut at some point during the first quarter. So participants will be looking to see whether that guidance is reinstated at the January meeting. Also on Thursday, we have the weekly jobless claims data from the United States. The initial claims print there will coincide with the January non-farm payrolls survey week. We also have the latest retail sales figures from Canada and consumer confidence from the Eurozone. And last but by no means least, on Friday, probably the busiest day of the week, actually, from a calendar perspective at the very least. In the early hours of Friday, we have a policy decision from the Bank of Japan, as I alluded to earlier on, expecting the BOJ to deliver a 25 basis point hike to 0.5%. And of course, focus will also fall on the BOJ's guidance and whether they are expecting further hikes in the month ahead. We also have the latest flash PMI figures from pretty much everywhere, including the Eurozone, the UK, and the United States. And Friday also brings our final read on consumer sentiment from the University of Michigan for January, and yet another speech from ECB President Lagarde, if that wasn't boring enough already. But I think, broadly speaking, it is going to be the political side of things that takes centre stage this week as Donald Trump takes office once again. And as a result of that, things could be a little bit uncertain, a little bit volatile, and relatively choppy out there as well.
Exactly that, my dear friend, exactly that. As our mutual friend Paul would say, remember to factor in the fuckery, especially this week.
There's going to be a lot of that,
Brown,
I think.
Yeah, I'm going to get that on a t-shirt. Also, when we need to start talking about when we're going to launch our own meme coin, the PIQ Michael Brown meme coin needs to be something that we need to discuss. But anyway, moving on. Mr. Brown, thank you as always for listening in. Shout out to all our listeners for tuning in daily. We do recognize you regulars and we very much appreciate it. Like we said before, it's going to be thin and wispy markets like his Barnet today. So
I wondered when that was coming.
Well, sit back, enjoy the inauguration, watch for the fireworks, and we will see you tomorrow morning. Goodbye for now.
Bye-bye.
Bye-bye.